I'm about to tell you 5 locations that are about to boom in 2024. All jokes aside, if you know that ad, I'm sure you get annoyed when his ad pops up every time, but in all seriousness today, going to run you through 5 locations which are sitting very high on our R-score, the Ripe House algorithm score, and predicted to really get high performance growth for 2024. I'll run you through each 5 locations for, I guess, the sake of covering a wider audience. They're at different price points, and at different locations across the country as well. Want to make sure giving people watching at home plenty of options to do a bit of research along the way as well. So we'll get into the first one, and I should openly preface as a business, we are not currently purchasing in these locations. However, we have in the past, but again, they are still flagged for high performing growth and worth pursuing moving forward. So area number 1, we're looking at the town of Bundaberg up in central Queensland. If you're not familiar with Bundaberg, there are a few gotchas to be careful of when you're investing in Bundaberg. So firstly, I guess the R-score is absolutely fantastic for Bundaberg. It's sitting at that 95 to 90% score, which is top of the tier. We've got really affordable entry points between that $350,000 to $450,000, and the yield is really strong up in Bundaberg between that kind of 5.3. You still can get the odd property 6 or sometimes slightly above 6%. There are some big gotchas in Bundaberg to be very, very careful of, and it's extremely important you do your research for these parts, because the big 2 pitfalls when it comes to Bundaberg, there are some sections which are quite dense in public housing, which you want to stay away from. And the second, or the biggest gotcha really for Bundaberg, it has been prone to flooding. We can see the river running here through Bundaberg. So there are large portions of the Bundaberg area which are flood impacted areas and will come with heavy insurance premiums. Still doesn't mean the whole town of Bundaberg isn't worth investing in, but you do want to steer clear of the Bundaberg flood areas, but the rest of Bundaberg, there are some good areas to try and target from there. But that's at the affordable price point, and it's the odd property in Bundaberg actually will come up below $350,000 as well. The next location sticking in Queensland is Ipswich. That's a very, very probably becoming more known location in property investing circles. Some of the pros for Ipswich is that it is in that metro Brisbane region, around that kind of 35 kilometres, 40 kilometres from Brisbane CBD, and has great infrastructure in terms of rail and projects and hospitals, etc., happening out at that side of Queensland. Ipswich, 85 to 99%, so there's a bit of an array in terms of scores in that Ipswich region. If you're not familiar, Ipswich has some kind of older, more established areas, but it also has some more newly built kind of areas where it's kind of late 2010, early 2010 kind of building time. So it's understanding where to invest in those markets. But the price point is, again, still at an affordable price point, $450,000 to $550,000 with a 4.5 to 5.3% yield. Now, for some people, that yield might not quite be enough. I should preface as well, though, there is the odd property in Ipswich, which is a newer build, we'll call it again kind of 2000 timeline, which have quite a bit of depreciation on them. And that depreciation can kind of help boost up your rental yield by 0.5% or so, again, making that far more of an attractive option. In terms of Ipswich, some of the gotchas to be careful of in the Ipswich region, I should say. So firstly, public housing. That's number 1. There are some pockets which are densely filled for public housing in Ipswich. Number 2, there is also flood impacted areas, not as prevalent as Bundaberg, but there are still flood impacted areas. And the third one, it's probably less common. You're not going to find many of these locations where you need to worry about this. But Ipswich is sitting on an old mining site, so there are mining overlays in the Ipswich area. So again, you need to be really mindful and want to avoid them as well, because they come, again, with heavy insurance premiums. For us here at an advisory level, they're a bit of a no-go area as well. Number 3, We're now in southeast Queensland still, so 3 Queenslands back to back. The next 2 are not in Queensland, but we're looking at Logan, the old Logan Bogan, if you're not familiar with that one. Lower socio area, but is really starting to gentrify, and has great, you can see the big highway running through here, great highway access. Logan has started to really kind of already gain some traction, but is still going to be highly in demand. Huge hospital projects happening out there. Got really healthy yields, again sitting at that 4.2 to 4.8%. Price range is starting to move already, but we're at that $550,000 to $650,000 price point. You can even still pick up the odd property in Logan, kind of at the lower $500,000 price point. Again, our score is very wide ranging, but even 84 is still a very good score. So we're sitting at a wide range between 84 to 99%. Biggest gotcha for Logan is it is a lower socio area, but it does have quite a lot of public housing. It is probably one of the bigger minefields to navigate in terms of public housing in all the LGAs that are approved here from a Ripe House perspective. So you do need to navigate that space quickly. I guess what is attractive for a lot of people for the Logan areas, it is still quite affordable, but also you're around that kind of 35 kilometres away from the Brisbane CBD. If you're living in Melbourne and Sydney, that's a walk in the park in terms of a commute every day. But you're also, if you're not familiar with kind of the lifestyle factors in Brisbane and Gold Coast, people from Brisbane will frequently travel down to Gold Coast on the Friday, Saturday, Sunday, kind of have a bit of a travel period there, or vice versa, people from Gold Coast up to Brisbane. And it's around about 65 Ks away from Gold Coast. So it's kind of got the ability to travel to and from both cities in a rather commutable time. So Logan's a really, really strong one, set to boom even further in 2024. Next, we've got Stirling in WA. We can't quite see it here, but beautiful beaches in certain pockets of Stirling. Stirling's got quite a few suburbs in that WA region. You've got some pockets that are lower socio and at more lower price points. We're probably more referencing at the price point we've got listed here at that upper edge of Stirling, even kind of bordering into Wanneroo in certain points as well. But $550,000 to $700,000 price point, really strong performance on the R-score, 88 to 96% range. And at this higher price point, you're still able to get really attractive yields, 4.8 to 5.5%. And I should preface as well, there are quite a number of properties in this area that are newer builds. When I say newer, let's just say 2000, late 90s, that have depreciation on them, and again help boost that yield up in terms of your depreciation that you can tap into. So really looking strong for Stirling still in 2024. Then we move into New South Wales. So you get asked all the time, what about Sydney? What about Sydney? Sydney's back. Sydney's back in a big way. We've actually got a few locations that are approved from an advisory level here at Ripe House. But looking at Blacktown, if you're not familiar with Blacktown, again, around that kind of 40 kilometres from Sydney CBD, still to this day has a lower socio stimulus attached to it. But again, we want to make sure we're looking at the fundamentals. That area is really well and truly filled out now. There's no land there or really available land nearby. And that's really reflective in the price point we're seeing here. That price range is fairly broad, but we're in that kind of circa $750,000 to $1 million price range. The yields are not the greatest, but if you're somebody who's really, wanting to go headstrong into the Sydney market, this is where we would be placing our money personally. So 3 to 3.5% yield. You can see the R score is really high, 90 to 98%. Again, 2024 for Blacktown is looking very, very, very strong. So guys, I hope you found today's video informative, took something away from it as well. If you do have any questions, comments on the top 5, maybe you'd like to see more content like this, please leave a comment below. If you're not already, please ensure to follow me on LinkedIn, where I'll be posting more data and reports on that site as well. But for now, thanks for watching and catch you on the next one.